How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update for gold versus US dollar. And as you can see today on Wednesday, we talked about this the previous episode. We were suspecting that price was going to trade up into this old IPDA look back low, the 40-day low. So from July, counting back 40 days within this quadrant here and here, we can see the 40-day high and the 40-day low. This old low was already broken, but you can see here in this example for today, you could have used it for an opportunity to go short. You can see a trade setup unfold along the lines here today for that daily candle. So price traded up into that 40-day look back low and then gave a sell-off here. And we could see that on the lower time frame, it was during the New York session. Here as well, we broke a swing high formation. And we also got close to this swing high formation. But the fact that we broke a swing high formation, I'm going to see whether or not we're going to get a higher swing low, higher than this one here, show that the commercials are now repositioning themselves to go net long. So in these down close candles, that could be them buying and increasing their net long positions here. Doesn't necessarily mean that they're selling, but it does mean that they may be accumulating buy side orders to then push price higher. Same thing vice versa. I said that the gold was in a premium and dollar was in a premium yesterday. Now gold is in a discount because it dropped below July's opening price. Just go back to reference that. So you can see gold drops right down below the opening price for July again. And I said that they can't move in the same direction previous episode. They're inversely correlated. DXY, however, was moving higher. We can see the DXY is running up and it's still above July's opening price. So you can see it's probably trying to target this swing high here. Now, if the market makers do want this to sell, I would rather run this swing high formation, something along the lines like this. Price comes up, and then we get a short going on, going back down to the 20-day low. That's what I would suspect. Or we run into a higher time frame, bearish shorter block, breaker, mitigation block, volume imbalance, something along the lines like that, a gap, something along the lines like that to go short. The fact that we're in a premium tells me that a high sell scenario can unfold here if the market makers want this to go bearish. I'm not sitting here trying to predict what they're going to do. However, I do allow price to play out for me to then stake myself in a position where I'm saying I feel more confident that the market is going to go lower because of X, Y, and Z. I think the market is going to go higher because of X, Y, and Z. And as of right now, I'm still waiting. NFP is right around the corner. It's on Friday. I do not trade NFP. On NFP weeks, though, I do trade other intraday models like the Asian Session model. And you can check that out on my channel. I have a series on that, a whole library talking about examples, mainly concerning around UJ. But anytime it comes to the first week or the week that has NFP on it, going into a new month, I'm normally not trading NFP and I'm only just sticking to what I know. I'm not trying to do anything fancy. And if I don't know, sit on the sidelines. And that's what I do. I wait for the best opportunity here to unfold. But like I said, I think dollar's going to probably purge buy side, right? And then come down and take out sell side. And I should have made that red. I always make my highs red. I want to see it take out the buy side here. We'll put a little dollar sign here for the next episode. I want to see it run up here and then probably break back down. And then come down and take out the 20-day low. And then we have all these relatively equal lows here as well. We're in a premium range right now. So if we were to measure this low to this high, cut that in half, that's what this black dash line is. So it looks something along the lines like this. So I click this, I change it over to premium and discount. That's what it looks like. That's the premium, that's the discount. Currently, dollar within this range, this swing low to this swing high, measuring it, it's in a premium. So we could probably find sell scenarios here. We're also in a premium for July. So there's a lot of confluences stacking up here. But in order to catch a sell scenario normally and generally, I want to wait for a previous daily high to be rated and then look to go short. Same thing vice versa. If I'm looking to go long, I would prefer a low to get rated. If I were the market makers at least, I would want the low to get rated because I'm taking sell side. I'm inducing and pulling people into the wrong side because they think it's dropping and it's selling. And then I turn it around on them really fast. And then I run their stops because they're selling. They most likely have a stop loss above a high. So it's a lot of psychological things that can play out here. But I'm still sticking to what price action is showing me. Currently, you see gold drops back down in a discount. We're probably loading up for a buy scenario. Like I said, seasonal charts was telling me that gold was potentially going to be bullish for July. And then going even to August, September sideways, October, but finishing off towards Christmas or December, bullish. So we're going to see if that seasonal tendency actually plays out. Not saying it has to, but we're going to follow the price action to see if it supports that. If it does not support that, well, then we'll know immediately and go against the seasonal tendencies and know that gold is not going long. It's most likely going to consolidate or go short. Hopefully this was insightful today. Peace.